Hey, what's going on, everyone? Zach Hubbard and Breon Price here with UMC Capital. Wanted to fill you in on some important mortgage knowledge this week. Breon, what do we got to talk about?
Yeah, so first thing we want to hammer on is soft credit checks. This is super important because if you've ever had your credit pulled, I would say, in the last year, 2 years, you understand that trigger leads are just the biggest hassle and inconvenience in the world. So a trigger lead is essentially when Equifax, TransUnion, and Experian pull your credit, they sell that data off as a trigger. They're super cheap leads. Mortgage companies, credit companies all buy that data. And then essentially they just harass your client, for lack of a better term. Okay. When we soft credit check somebody, that data does not get sold, which is really, really cool because, it stops that from happening. It also allows us to basically fully pre-approve a client without adding an inquiry onto their credit report, which is super important to a lot of your higher end clients that just don't want their credit pulled, in the process of mortgage shopping. We can issue out an entire pre-approval. We can talk about rates, fees, all of those items without adding an inquiry by doing this process. So really, really cool. Something that I think we specialize in. Zach, what's next on the list?
Next one is flexible loan and rate terms. So this is definitely something that we like to hammer home on and try to show our clients and to our relationships that we can differentiate from the other companies. Saving our borrowers money. That's a big one. Instead of locking it at exact rate terms, we can come down to the hundredths of a percent. So it's very minor, but I mean, if you look at it in a whole year term, I mean, it's saving them close to 50 to $100. So I mean, in the market that we're in, this is huge for a client.
But how do you think that impacts rate locks? Right. So, when we lock a rate in, from, instead of a 30-day rate lock, which is standard, and we do a 14-day rate lock.
Exactly. Yeah. So, I mean, our normal turn time is always 14 days, 2 weeks to close on a loan. So instead of locking a rate at a 30-day, we can lock it at a 20-day or a 14, 15-day. And this helps save the borrower money and get them into a better pricing and to a lower interest rate too.
Absolutely. So right now with interest rates high, obviously any way that we can save clients money, is going to be super important. It's going to take that client that's on the fence and move them off the fence and start searching for a home. So really, really cool. Last thing we want to talk about, guys, is instant fundings. And I think this is actually of all the things we've hammered out today, the most important. If you've ever been to the closing table and you've signed all the loan paperwork, everyone's happy, but then the title company won't disperse funds, checks, or keys, that's because they're waiting on funding from the bank. We have what's called instant funding here. Okay. We do not require a funding authorization. Once the last document is signed, as long as the buyer's money is there, we're good to go. Okay. So you do not have to wait that extra half hour, 35, 45 minutes for somebody to basically send the paperwork back to the bank, have them review it all real quick, and then, give the authorization. We want this process to be, as white glove service as possible. And if you have clients that are waiting at the end at the closing table, that's just not what we want. It's not something that I think is fun for anybody. If you've ever sat in a closing and you're kind of just sitting there awkwardly waiting, we want to avoid that awkwardness. So let us know if you have any questions, guys. We've had a lot of really good success, with this EXP group so far. I look forward to riding that out to the end of the year and really knocking things out come 2024. Thank you. All right. I think that was pretty good.